what? Banks are not in the business of losing money. If the bank is so confident in the real estate market that they give you 4 times your money, that should mean something to you.
You're tuned in to Boardwalk Talks with Monopoly Group Toronto, where we give you the latest news, tips, and tricks all about real estate investing so that you too can climb the property ladder. Visit us at torontomonopoly.ca. Hey everyone, it's Ken from the Toronto Monopoly Group. I just want to thank you, first of all, for tuning in to our very first podcast, episode number 1. And I'm here with our agent, Jonathan Wong.
So, hey, what's up, guys? How's it going?
All right. So, John has been with us for the past 2 years, and he's really getting the concept of the Monopoly Group. Basically, it means that you're going to find your place on the board. You know, you walk around the board, stamp your name in, and buy a property, keep going, and then slowly trade up. So we're basically helping you up the property ladder. And that's exactly what John's been doing as well, too, for the past 2 years since he joined us, right?
That's right.
All right. So let's tell us a little bit about your history. You started with pharmacy.
Yeah. So first I was in pharmacy school and had a lot of free time.
And graduated. Don't forget you graduated.
And I graduated.
It's actually a doctor, by the way.
Yeah. So I had some time while I was in school. I got my real estate license then. It just helped with my tuition payments as well. And during the course of school, I really enjoyed helping people. I served families every day, but I just felt like pharmacy wasn't my true calling. So I naturally transitioned into real estate, and still doing the same thing I was doing 4 years ago. I'm helping families every day, and here we are.
So in the process of helping them, you kind of got tempted on your own, right? So now you're in a 2-bedroom condo, and lately you've been helping a lot of your buyers get into houses, right? The first houses.
Yeah, it's crazy. I've been helping a lot of my classmates and close friends of mine actually move out to Leslieville. I would say the very hip thing to do out there nowadays is to buy a property that not only can you live in, but also get some passive income, some rental income from that. So lately, they're moving out to Leslie. People are getting semis or even fully detached homes with the potential to rent out a basement, have a basement tenant to help pay down their mortgage. And yeah.
That's awesome. So the Bigger Pockets Forum, they always call that as house hacking, which is pretty cool. So basically you live in the upstairs, I guess, or downstairs, whatever. You live in one of the units and you rent out the downstairs. So that's pretty cool. But let's talk about why that's so important, investing in real estate, and why it just makes sense. I mean, it's the 4 pillars of real estate wealth generation. And really basically the 4 ways to make money in real estate. So number 1 is cash flow. Number 2 is debt pay down or equity growth. Number 3 is capital appreciation. And number 4 is the tax benefits. So let's go through each of that. Let's give an example. So, the numbers that you're going through, you're going to sell your condo, your 2-bedroom condo. What's that worth? Like 750, 800?
Yeah, let's be conservative. Let's just say 750, 800. Yeah.
Okay, 750. All right. So let's call it 800. And then after selling costs, you'll probably walk away with what, 750 or so?
Sure. All right.
So then what are you looking to buy your home in Leslieville for?
So yeah, I'm looking for a duplex also somewhere in Leslieville, something that needs a little bit of work. I think I can get into the market around 800 if I look hard enough. From there, once I purchase the home, I'll probably have to take about $150,000 to $200,000 of my own money to fix it up, to renovate it to the way I like it. And from there, I'll live on the upstairs floors and I'll have a basement tenant hopefully.
Okay, that sounds awesome. So let's say if you work with 800,000, right? I assume you're gonna put about 20% down?
That's right.
So that's 160,000, okay? So let's work on that. So 160,000, that's another 150K for the cash repairs. I mean, you can always finance that through Purchase Plus Improvements or some other programs, but at the end of the day, let's not worry about that. Let's just assume you're gonna pay cash. So you're looking at $210,000 out of cash, right? Mm-hmm. What do you think the after repair value will be after it's done?
In that area, I would say a lot of the nice semis going out in that area, as long as they have a parking spot too, they're going for a comfortable $1.2 million.
Wow, it's amazing. So you essentially basically created another 100 and or almost 300 grand in space there, right? And growth. Great. So, okay. So what's your mortgage look like on a 800,000 purchase?
on an $800,000 purchase with 20% down, you're looking at roughly about, depending on the interest rates, about $3,000 to $3,300 a month.
Okay, so 640,000 would probably be your finance rate, and then you're looking at a 3 point something, almost 3.89, let's say.
Yeah, sure.
To 25 years, and that works out to about 3,300 with principal and interest, right?
Yeah.
And what do you think you can get for a rental?
Rental in that rate, roughly about $1,000 to $1,200 a month in that area.
I'm pretty sure you can get more, but let's call it $1,200 just to be safe. All right, so you're looking at really paying $2,100 out of that, right?
Correct.
Okay, so $2,100 plus you got to pay your taxes, which would be how much?
For a semi-detached house out there, looking around $4,000, 4,500.
So 4,500 divide that by 12, we're looking at about 375, and then some I guess heating. So let's call it 2,600 all in. Think that's fair?
Okay, sure, that's fair.
All right, so 2,600, including the rental income to offset everything. You know, for an $800,000 condo, you're pretty much paying the same thing, are you not?
Yeah.
So that's awesome. So a lot of people actually say they don't want to get started in real estate because it's not cash flow positive, which is, in my opinion, ridiculous, because cash flow positive really means you're paying your principal, your interest, your taxes, and your maintenance, right? And they want to break even after that, or at least break even. My school of thought is that if you're losing a bit of money, it's okay because you're paying your principal down. So that's already two pillars of the wealth generation right there. Cash flow, okay, fine, cash flow negative, you're not hitting that pillar, but you're getting the equity growth, the debt pay down, which is huge, right? So yeah, tell me about that. I mean, and then yeah, tell me about your situation there. Like, you think that's your line of thinking there, John?
Yeah, the thing is, I just wanted to grow. I staying in this 2-bedroom condo, it's been great. Don't get me wrong, but you know, right now the only thing I'm getting from that my current home is the appreciation. I'm missing out on that rental potential. And you know, what's going to happen 10 and 20 years down the line? Say, you know, I want to retire early or go on vacation. Well, guess what? I could depend on that basement tenant to bring in some income, right? You got to start somewhere, and I'm not going to say I'm not saying that I'm going to stick with this duplex for the rest of my life. Maybe I'll move from there. I move up. I climb up the property ladder. I go to a triplex. I go to a multiplex, right? You got to keep going.
Real life monopoly right there.
I keep going, yeah.
Yeah, that's exactly what we're doing. So, you know, you probably won't retire off the $1,200 a month. You know, by the time you retire anyway, it might be like, I don't know, $2,000 a month. Who knows, right? But at the end of the day, you're not going to retire off of that. You're going to retire off of multiple properties, I guess you could say. Right? So that's our goal. Oh yeah, let's talk about price appreciation, right? So assume that assume that condos are going up at what, 10% a year?
Yeah, conservatively, sure.
You know, so that's okay too. And houses right now are going up a little bit. Let me put the last stats actually. Do you remember what the recent price appreciation went up by? Okay, the latest one went up. We're looking at detached houses in the 416. Average price was up 3.6%. Okay, condos are up 9.2%. That's still pretty impressive. Very impressive, actually. So at the end of the day, let's call it 10%. Or no, let's call it 5% to be conservative. So if you're going up 5% on $1 million, what does that work out to? 50,000, right?
50,000.
Yeah, it's amazing. And on the cash and cash returns, what does that work out to? So 50,000, divide that by the 210 it took to spend on it. So you put 160 down for your down payment, 150,000 for your renovations. Look at 23% cash on cash returns. Now that's amazing. Power of leverage, right? Basically, you 5 times your money. Whatever you're putting down, you 5 times it. So I'm seeing this work with your situation. That's great, John, that you're building your wealth that way. I just don't understand why everybody wouldn't do it. You know?
Yeah. It's a shame.
Yeah. So, all right, that's appreciation. And then the last pillar of wealth generation in real estate is the tax benefits. So when you go to sell your condo right now, how much would you say you made on it from when you bought it to when you're selling it now at 800,000?
Let's just say after I pay real estate commissions and taxes or whatever, let's just say I clear about 200 grand. And I only bought the condo about 2 years ago.
And so you made 200 grand in 2 years. That's 100 grand a year, right?
Yeah.
It's freaking awesome. It's tax free because it's your primary residence. So, I don't know how it works with multi-units if you have a basement apartment and all that, but talk to the accountant. I'm pretty sure it's you get to write off some of it anyway, if not all of it. Capital gains free. And you know what? Even if you do have to pay taxes on it, if it's an investment property, say I sell one of my investment properties, I'm only getting taxed on half of the gain, not on the full amount. Whereas if you earned 100,000 a year, you're getting taxed on $100,000, right? That's another way to win in real estate. So, I don't know. Anything else to add, John?
No, I think we covered all the points pretty well.
Okay.
We should give them a nice
some of the things you're hearing out there from some of your clients, some of our clients, really.
Of what we're hearing out there?
Yeah. What's their experience like when they're buying in real estate, investing in real estate? There's still a lot of my clients. I would say they're still very sold by what they hear in the news and media outlets. Of course, they like to do a lot of fear mongering. It's always a lot of negativity. The market's going to crash. It's been crashing for the last 8 years, apparently. There's a lot of concern out there. But the market keeps moving. People are still buying, people are still selling, right? Yeah, as long as it hits those 4 pillars of wealth generation, I think it's okay, right? I mean, the price appreciation might shrink a little bit, but at the end of the day, in the long run, we're still a growing city. There's still net immigration. And I personally think that there's a long way to go. So, I mean, at the end of the day, if we're buying, holding, renting out, fixing, and then refinancing everything, man, that makes sense. Hey, that's another thing. So exit strategies for real estate, right? I mean, you don't have to sell your property to realize the gains. You can really just refinance and take a line of credit out or get a new mortgage, and all of a sudden you get a chunk of change back, right? So yeah, your monthly spend goes up a little bit, but if you have somebody to offset the cost through a rental income or whatnot, why not? Right? So basically you do it with no money down or a little money down anyway.
Yeah. One thing, interesting thing that I was told by someone one time was that, say for example, if you had 100 grand, okay, in cash, and you went to the bank, there's only on the 100 grand, there's only 3 ways you could spend it in life: on real estate, on opening a business, or maybe if you're really good at investment banking, stocks, any sort of like equity markets, whatever. So imagine if you went to the bank and you ask them, all right, I want to start a business. You have a great business plan and you have 100 grand in cash. Maybe they'd give you a business line of credit matching your 100 grand 1-to-1. Okay, so that's one option. Number 2 is if, for some reason, you convince the bank, although they probably laugh you out of the bank, to lend you some money to play in the stock market. How much money would they match for your 100 grand in cash?
Yeah, exactly.
Unlikely. And then number 3, if you had 100 grand and you went to the bank and you told them you want to buy a house, how much money would they lend you? They'd 4 times your money. With 20% down, if you had 100 grand,
5 times.
They'd give you 400.
5 times.
For a $500,000 home.
Right. I see what you're saying.
Guess what? Banks are not in the business of losing money. If the bank is so confident in the real estate market that they give you 4 times your money, that should mean something to you.
That's awesome.
Just saying, right? Makes
awesome.
you wonder.
That's awesome.
Yeah.
Well, I mean, it's just, I don't know what else to say. Makes sense. Makes sense to me. Makes sense to you. That's why we're helping you do this. And those of you guys don't believe in real estate market, climbing that property ladder.
Climb up with us, guys. Climb up.
Come meet us up here, For the people that don't believe it, I want to get you on the next show. Let's have a head-to-head. Let's have a debate and see your views on thoughts on investing in real estate. Yeah,
let's bring in one of our clients, maybe that works in the banking industry, investment banking. Let's have a go at it.
Yeah.
Juicy.
Yeah, let's do it.
Okay.
All right, man. Thanks for joining us. Guys, everybody, thanks for listening. Thanks for watching, whatever you're doing, whether it's YouTube, Apple iTunes, whatever you're seeing this on. Stay tuned. We're going to have a weekly podcast and or video, and we'll go from there.
Check you guys later. See ya.
If you like what you just watched, don't forget to click to subscribe. We're on Apple iTunes and YouTube as well. And visit us at www.torontomonopoly.ca. Thanks for watching.